FY19 result from Aurizon yesterday. Look, the earnings declined, but it didn't decline as much as I'd expected. Part of that was to do with a $20 million recovery from Clive Palmer's Q&I. So thank you very much, Clive, helping out there. Look, my view of the company is very much unchanged. It has very limited options for growth via capital investment. Its above rail business is chasing operational efficiencies to try and offset some pretty intense pricing pressures coming through from competitors. And then in the below rail business, well, we know that the revenues are relatively certain, so it's a big cost out story on that one over coming years. Aurizon's already paying out 100% of its earnings as dividends. In a market that's hungry for capital management, the big talking point yesterday was the announcement of a $300 million on-market buyback, and then also an announcement that they're restructuring their balance sheet, their capital, their debt sort of portfolios, so that they can actually add an additional $1.2 billion of debt capacity. So in that environment of very low growth options, the reality is that debt capacity is likely to be progressively drawn over time to fund even more buybacks. So look, what have we done with our number crunching? Target price is up from $4.73 to $5.51. That's mostly due to that buyback program increasing the long run leverage within the above rail business and therefore reducing its cost of capital. So that gives a big kicker coming through. So really close to, when you compare it to yesterday's close of $5.86, the stock looks fair to fully valued in my thoughts. In terms of yield, current prices, the stock's pretty attractive. Expecting a dividend yield of about 4.8% on FY20. So their final divvy for second half 19 was 70% franked. So if we assume that continues going forwards, it's a pretty healthy grossed up yield. And I think that divvy can probably grow by around about 5% CAGR over the following 2 years. And then there's risk. There's risk to that dividend over the following 2 years as a result of regulatory pressures and also pricing of contracts that expire. So just something to watch for there. So look, my view with the stock, with the buyback program in place, is likely to be on market buying for that for the stock through the buyback program. So that'll provide it with support. And then you've got the reasonable yield, but from a fundamental valuation perspective, looks a little bit expensive. Keeping the hold rating on the stock.